One chart, one draw-dropping number, and suddenly everyone's asking the same wild question. Could a humble $2 coin really rocket to $123? Stick around, because by the end, you're going to know exactly why some people believe that it can, and why others say that we're completely out of your mind. Okay, picture me last night, 2 coffees deep, staring at a chart that looked less like a polite price graph and more like a detective's corkboard in a crime movie. Loops, lines, arrows, everywhere. The culprit? XRP's latest breakout. And the prime suspect behind this outrageous $125 prediction? A technical analyst named 𝗕𝗪𝗪𝗧, who basically found a time machine pattern hidden in, well, plain sight. Now, as soon as I saw the numbers, I knew I had to break it down, because whether you're an XRP believer, a diehard skeptic, or you just like a good old crypto cliffhanger, this story is too juicy to ignore. We're going to be talking Fibonacci spirals, 50x dreams, and the very real possibility of a $7 trillion market cap. Now, we're going to get brutally honest about the risks, the critics, and why talking profit is sometimes smarter than actually clinging to moon math. And hey, if at any point you want to kind of geek out live with a bunch of fellow chart addicts, why don't you join us in our crypto Discord server using the link that is in the description. Grab it before the next candle closes. Now, let's rewind to where all this excitement began, December 2017. Now, Bitcoin was flirting with 20 grand, and XRP, this kind of plucky little remittance token, was trading for less than a price of a gumball. Literally 2 decimal zeros in front of it. Back then, it spent about 2 years kind of trapped inside what chart nerds call a pennant, a fancy name for this thing that can't pick a direction. Then bang! XRP sliced out of its kind of pennant like a cork popping off champagne bottle. And it didn't just tiptoe higher, it actually catapulted past the 1.00 Fibonacci level at 3.64 cents. Pause for a breather, zoomed to the 1.618 extension at 17 cents, caught its breath once again, and finally ripped straight to the 2.618 extension to kind of crest above $3. Now, if you blinked, you probably missed it, and if you sold too early, you probably cried into your orange juice for weeks. You fast forward to today, and well, Marx says history is repeating itself, like your favorite 90s sitcom rerun. Now, he points to a brand new pennant that's been, simmering since 2018. 7 solid years of sideways purgatory. Now, that consolidation finally snapped in spectacular fashion, propelling XRP into the $2 neighborhood. Now, according to Marx, that's the kind of script's first act. The second act, the one that we're living right now, right, is the kind of quiet sideways grind, the point where traders get bored, kind of wander off, and start Googling dog pictures instead of checking charts. And spoiler alert here. That's exactly when the first act of 2017 set up its next blast. Marx's model basically says that the next logical pit stop is the 1.618 Fibonacci extension. That's $9 and change, or precisely $9.63 if you love decimal places. Sounds spicy, right? Well, buckle up, because he doesn't stop there. He actually implies or applies the same Fibonacci math that took us from 17 cents to $3 last cycle, and lands on a colossal 2.618 extension of, wait for it, $123. It's pretty bold, right? And there's a hair, or at least that is actually a hair over 50x from where we're hanging out today. So picture your modest $1,000 bag suddenly flexing into low 6 figures. Suddenly, the phrase retirement island stops sounding like a meme and actually starts looking like a kind of Zillow search. But before you go ahead and swap your 9 to 5 for beach life, let's get realistic about what a $123 XRP means for the broader crypto universe. Right? XRP's circulating supply is roughly 58.5 billion tokens. Multiply that by $123 and you get something like $7.2 trillion market cap. So let that sink in. That's bigger than the current market combined market caps of Bitcoin and Ethereum. And those are two already the kind of twin pillars, if you will, of crypto Olympus. Right? For XRP to command that kind of valuation, we're talking about the entire global financial plumbing rewiring itself around Ripple's technology. Right? Every central bank needs to be on speed dial, and maybe an Avengers level cameo from every kind of Fortnite or I should say actually Fortune kind of 500 CEO, for example, right? Possible, maybe, easy, no, absolutely not, right? The quote, or at least to quote the skeptics here, that's not a price target. That's a Marvel movie plot twist. But if you didn't catch the video from yesterday, you're probably going to want to check out why market cap really isn't what it seems. But the skeptics, they do have a point. A lot has changed since 2017. Back then, the entire crypto market cap was pocket change next to what it is today. Many, or at least I should say retail mania, could double coins overnight back then just on hype alone. Now, liquidity is deeper, but so is competition. Right? We've got layer 2s, zero knowledge roll-ups, and fresh meme coins, dropping like TikTok trends. Each one, begging for the same investor dollar. Plus, there's the never-ending regulatory soap opera. Right? The SEC might have given Ripple a partial green light, but a single unfriendly ruling could send XRP back to the kids' table. And that's kind of why many seasoned traders swear to at least buy the ladder out strategy, right? Scale your exits as the price climbs instead of holding out for that one mythical final boss level, right? Take some chips off the table at $9, peel off a little bit more at 20, stash away house money at 50. Worst case, you've locked in life-changing gains. Best case, you still have skin in the game if Mr. Marks ends up on a crypto Mount Rushmore for nailing the call of the century. Okay, so let me give you my personal example then, right? Back in the last cycle, I had a small bag of obscure coins that went 40x in 3 weeks. Wild, right? But because I was busy chasing a perfect top, I ignored my own sell targets. I watched it double, triple, quadruple, and then crash 90% in a weekend. Right, the profits went from life-changing to just lunch money. The lessons learned? Charts can show you possibilities, but your exit plan is what turns those possibilities into actual dollars in your bank account. And if you need more support for sticking to the plan, join our free crypto Discord server. It's kind of basically 24/7 therapy couch where everyone celebrates green candles and talks each other down off the ledge when the market looks like a barbecue gone wrong. Now, let's circle back to why Marx believes the fractal still works. First, there's human psychology. It doesn't evolve as fast as our tech toys, right? Fear and greed drives patterns in every single market, from tulips to tech stocks. Fibonacci levels aren't magic either. They're self-fulfilling prophecy zones where enough traders expect a reaction, so they kind of place their orders accordingly then. And when millions of participants share the same playbook, prices often gravitate to those key ratios. Second, you've got XRP's tech stack and partnerships list that has grown since 2017. Right? The cross-border payments niche that Ripple's kind of targets is bigger than it has ever been before. And even if even a sliver of those transactions migrate from the old school SWIFT system to on-chain settlement, the demand pressure gets real fast. Mark's camp also argues that the current consolidation resembles a coiled spring. Volume is thinning, volatility is compressing, and historically, when XRP breaks out of such tight ranges, it doesn't tiptoe, it stampedes. So picture a crowd squeezing through a narrow exit, right? And when fanning out across an open field, right, or at least fanning out over the open field afterwards, that kind of first sprint can be breathtaking. And if macro conditions line up, think favorable regulation, bullish Bitcoin, and maybe a sprinkle of media hype. The blast radius kind of grows. On the flip side, the critics kind of throw a kind of chilly bucket of statistics back at the bulls. Right? They point out that XRP's supply dynamics really do matter. So while Ripple's kind of monthly escrow releases are no longer the shock that they once were, they still add overhead resistance, unless of course demand outruns the supply. Plus, we can't ignore competition, right? Stellar, 𝗕𝗘𝗪𝗓, for example, and even new generation blockchains as service platforms are eyeing for the same banking relationships. So each kind of signed partnership with Ripple is in fact a win, but it's not really monopoly here. And one more thing, you've got macroeconomy. In 2017, interest rates were practically hugging the floor. And free money was, sloshing absolutely everywhere, fueling risk assets. Today, borrowing costs are higher, and big investors eye a broader portfolio that now includes tokenized treasuries, AI startups, and even kind of goofy meme stocks. Right? For XRP to kind of capture trillions in value, the stars need to align: global liquidity, regulatory clarity, and perhaps a mega shift in how institutions view blockchain utility. And yet, here's the point that keeps hope alive, right? Crypto history loves the one-up itself, right? People scoffed at $1,000 Bitcoin, then 10,000, then 69,000. They laughed at Ethereum gas fees, then forked over hundreds of dollars per transaction during the peak of NFT mania. So while $7 trillion market cap sounds bonkers, bonkers is practically crypto middle name, right? It's hard to call anything truly impossible when dog memes on decentralized ledgers break into the top 10. So where does that leave us? It's actually going to leave us somewhere between cautious optimism and full-blown moon boots. Now, personally, I'm treating Marx's $9.63 midpoint like the next big checkpoint on the race track. If we blast through it with conviction, strong volume, healthy pullbacks, quick recoveries, then that's evidence that the fractal is indeed replaying. But if we get stuck under $10 and volume fades, that's a cue to tighten stops and maybe divert some capital to other promising startups. And hey, if we're hunting for a slice, at least a slicker place to kind of execute all these trades, you want to check out Blowfin via the link that's in the description down below. They're the fast-growing exchange that's been impressing traders with low fees, deep liquidity, and a UI so smooth it feels like butter on hot toast. Now, I've been testing it for weeks, and yes, I've moved part of my XRP stash there to see how it performs during moments of high volatility. Okay, so one final anecdote before we kind of hit the climax. A buddy of mine, let's call him Dave, was all in on the 2017 fractal replay before it was cool. Now, he mapped it out, set his alerts, and every time the XRP nudged a key level, he'd text me like an excited puppy. The day the XRP tapped the one level, 1.00 Fibonacci, equivalent at $2, Dave popped the champagne. Now, I reminded him that in 2017, the real fireworks started after that first pop. He smiled and said, "Patience, my friend, right? Patterns don't rush." Now, whether Dave ends up a profit or kind of a punchline remains to be seen, but his conviction underscores how powerful narratives can be in this market. A simple story, history repeating, can galvanize thousands, maybe millions of traders to act in harmony, right? And sometimes that collective belief is enough to tip the scales. Which brings us to the true climax, choice. Will you ride the fractal wave, ignore it, or hedge your bets, right? Because the next time XRP tests that 1.618 level at $9.63, the clock will start ticking. Some will sell, profiting life-changing gains. Others will double down, right? Eyes fixed on $123 like it's Mount Everest in the morning sun. And the market, as always, will reward both wisdom and luck and punish overconfidence with equal gusto. Personally, I plan to scale out gradually, celebrate each milestone, and keep a moon bag just in case Marx nails the call and Twitter melts down under a tidal wave of laser-eyed profile pictures. Whatever you choose, make sure to that at least the decision fits your own, risk tolerance and your own timelines. This isn't something for everyone, right? And not someone else's potential dream here. It has to be yours. And remember, right, profits don't count until they're actually realized. Charts are just possibilities and not promises. All right then, so a quick recap before we close the loop. Right, we've got a historical fractal from 2017 that turned pennies into $3 bills. Right, analysts, Marx, sees the same blueprint playing out again, starting with a breakout of $2, aiming for at least next for $9.63, and if the crypto gods do smile, a thunderous charge to $123, implying a $7 trillion market valuation. Now, bulls are chanting history rhymes, skeptics are eye-siding the math, and sane traders are preparing exit ladders, whether the train stops at $9 or rockets straight to the stratosphere. Whatever happens, stay nimble, stay informed, and for the love of your portfolio, don't let FOMO override common sense. If you want this conversation rolling or to keep this conversation rolling, hop into our free crypto Discord. The link is below. And if you're ready to kind of test trading on an exchange that's built for speed and transparency, open up Bluefin account using the link that's in the description down below and start trading crypto on the best up and coming platform out there.